So in this video, I'm going to be teaching us how to properly mark our market structures correctly, because market structure is actually the foundation of whatever strategy it is we trade. You understand? Whatever thing we do in the chart, it all started with market structure. You might be thinking that okay, market structure is a basic thing or it's not important, but no, you're wrong. Market structure is actually very, very important. Whatever strategy it is you trade, if you are not getting your market structure correctly, it's going to be a headache. It might work well, but it won't work to its full potentials. Do you understand? Because market structure is not just for marking highs and lows, highs and lows. No, it's for actually storing or finding valid liquidity points. You understand? That is why we mark our market structure, not just to mark highs or mark lows or mark highs or mark lows. No. You understand? And it also work with time frame as well. Each time frame has its own structures. So whatever time frame you're using, maybe your higher time frame, you're using your higher time frame for buyers or for day trading, then you use your 15 your medium time frame for 15. Your medium time frame might be your 15 minutes or your 5 minutes, and your entry 3 or 1 minute. Each time frame has its own structures, and you need to get every structures right, whatever time frame you're using. Okay, so now I'm going to teach us how to properly mark our market structure step by step. Okay, so in order to do this, we're going to start from the lowest point. So I'll most likely start from here. I'm using the GBP chart. Okay, so good. Now this is our chart here. You want to mark your market structure from here. I'm going to use my highlighter, okay, to mark this. This is the last low. Okay, this is the last low. And where did this last low came from? It came from this high, this pullback here, this high. Okay, good. Now it came from this high. I hope you can see my cursor. Good. So it all came from this high, right? Good. What I'm going to do is I'm going to put my trend line and put it there, just like that. Okay, good. Now price came and broke this high. Okay, it took this high, right? So this is the highest point price got to before we had a pullback. You get? So we're going to take that highlighter and then mark this again. Okay, right? Good. And then we're going to do what? We're going to put our trend line again. Okay, good. Now this high got broken again, right? We're going to take our highlighter and mark it. So the highest point price got to before it pulled back, the highest point. Do you understand? Some people will just mark, okay, this is the high, this is low, this is another high, and this is another low. No, that is not how it works. That is not how it works. We mark to the highest point price got to, and this is the highest point price got to. Okay, now this high, where is it coming from? Which low is this high coming from? So you're going to look at the last point price got to, the lowest point price got to. Where is the lowest point price got to? It is this low. Okay, this is the lowest point price got to. This low, that is the lowest point price got to. Okay, good. Now we move again, we mark it, we mark this high, and then we mark the low as well. Okay, so whichever one price breaks first, and as you can see, price did what? Price broke this low first before it even took this high. It took this low first, and then we're going to do what? We're going to put our highlighter, and then we're going to mark it. Okay, and this low came from this side, it's already marked. So we're going to take our trend line again, we put it there. Okay, we put it there. Structures like this. Now I'm supposed to do this in the part 2 video, but part 2 video of this market structure. But let me just give you a hint. Okay, let me just give you one example. Now look at this. These are our structures we've already marked, right? This will mark with the highlighter. That's the external structure on the 1 hour time frame. Okay, let me extend this so you can see. Okay, I can't extend it just yet. Okay, anyways, we are on the 1 hour time frame now. You can see this. We are using it, like I said, we're using these structures, these external structures, market structures, to find out valid liquidity points. Okay, to find out valid liquidity points. Now, for those that will mark these highs, these lows, or these internal highs or these internal lows as a liquidity, you understand, as a structure or as a market structure, it's actually wrong. Okay, it's actually wrong. Why? Let me show you that. Now let me just show you something. Trying to clean this out. Now look at what happened here. Let's take a look at this. You can see market came and then took this low, this low. Let me clear this one. Let me clear this one. Because normally some people will be like, okay, these are high, these are low, these are high, these are low, and these are high. You understand? Now look at this. Market came and took this external structure. Okay, this liquidity point you market, this external structure here, and then reacted off this imbalance and other block, and then break structure. Okay, giving us our strong break of structure. Now this is our valid break of structure. This is our valid break of structure, okay, in which you can trade up from, and then we will never expect price to take this low. We will never expect price to, why? Because this low already took a valid liquidity and then did what? Broke structure. So this is our valid break of structure. This one, you can say it's not a break of structure. It's not a valid break of structure in which I'll be advising you to trade from. Imagine you be like, okay, price has given us as break structure, okay, and then you want to trade from here, from this other block. You get smoked. Okay, so you wait for this kind of thing to happen, and then now you know that okay, this one has taken liquidity and break structure. Even immediately the price took this liquidity and then react off this imbalance, you can go to your lower time frame, look for your entry model to target this high. Okay, if you look at my last video on how I find my buyers, from here now, as price has taken this low, I know that the next target is this high. Okay, so I'll just look for my entry model sharp, and then I'm targeting this high. Do you understand? So this is the main reason. Just stay with me in this video. Watch this video to the end and you will get it. Okay, as soon as you're done watching this video, look for the part 2 of this video. If it is out, that's the volume 2 of this market structure. If it is out, then you're going to see how you can actually find your true break of structure, you understand, and know which one is actually a break of structure or which one is a liquidity sweep. Do you understand? Okay, so now we're going to get back to what we were doing. Good. And then wait for price to break either the high or the low, and then price to this high again. Okay, so we're going to, and where's the highest point price got to before a pullback? Price got to this point before it pulled back. You might be wondering, oh, okay, so why are we marking this? This is just is not a significant pullback, but it is a pullback because we have a bullish structure and a bearish structure. A bullish candle and a bearish, and it is the 1 hour time frame. Okay, if you go down to your 15-minute time frame, you're going to see that this structure is actually good, is actually big, a very huge pullback. Let me see if I can do that. I should be able to do that. Oh, can I? Let me see what I'm using. Let's go to the 15-minute time frame and see. Okay, yeah, I'm able to do that. Good. So now you can see the pullback. This is the pullback. You can see it's a it's a significant structure. Right, if you go on a 5-minute time frame, you see it's going to be bigger than this. Okay, so any time frame, any structure, even if it's a 1 candle pullback on the 1 hour time frame, on higher time frame, 1 hour time frame, 4 hour time frame, daily time frame, is a structure. Do not ignore. Okay, so you take your highlighter, you mark it. This is the highest point price got to before this pullback happened. Okay, good. And then price came to this lowest point and then came and broke this high again. Look at that. We put this highlighter and this trend line, we put it there in the high. So price took the high, right, and then got here. That is the highest point price got to before a pullback. Are you getting me? Price got here before a pullback, then we'll put that. So where did this low, this high, where did it come from? It came from this low. Okay, now this high, where did it come from? It came from this low, so we're going to mark that. Okay, we're going to mark that. Then we do what? We move our trend line right there. Do you understand? Now, if we go back to the 15 minutes, it might not be clear to you here. If any structure is not clear, just go 1 time frame lower. And look at that. Did you see that? Did you see? Look at it on the 15 minute. You can see that. That's the high and that's the low. Okay, now we'll go back to the 1 hour time frame. We go back to the 1 hour time frame. Right, and then we do this again. We take our trend line, we mark this high. There's always the highest and the lowest point. You don't mark whatever is happening in between. Look at this now. Look at this structure now. Let me mark this structure right there. Trend line. Whatever is happening in within here is not our business. Okay? Now, the way most of us mark structures, after this low, we'll mark this high, we'll mark this low. Say it's a structure, we'll mark this, we'll mark this. It's not. Everything there is internal. On the 1 hour, it's internal structure. Okay, if you are using this 1 hour to trade, you know that all this is internal. If you are taking your strategy or your trade on the 1 hour, all of this is internal structures. Okay, it's all internal structures, and that's why sometimes you get smoked. You get smoked. Okay, so now we move on. This is the high, and then where did this high come from? It came from this low, and then this high got broken with this again. So we'll take our highlighter and then we'll mark it. Okay, good. Where did this high come from? It came from this low, the lowest point. Okay, the lowest point price got to. The lowest point. Like, look at this now. Let's take this for example. Look at this high. You can see, where did this high come from? It didn't come from this low, because that's not the lowest point price got to before a break of structure. Sorry, that's not the lowest point. This is not the lowest point. This is the lowest point price got to before it came and broke structure. The lowest point. Okay, it's always the lowest point or the highest point. Do you understand now? Okay, so good. Now, what happens? I'm coming. Then we'll put our trend line on this low, and then the next trend line on this high. Okay, we wait for price to break that. So price took this, price took that, this high, and then we're going to mark the high. That's the high. And then where is this high coming from? It's coming from this low. That's the lowest point price got to. The lowest point price got to. Okay. If you go on the 15 minutes, if it's not clear to you, you go one time frame lower. Okay. We'll go on the 15 minutes. You can see that. You can see that's the high and that's the low. That's the low and that's the high. You can see it's a structure, so you don't miss them. Okay, you don't whatever one candle pullback on higher time frame, don't miss them. It's a structure as well. You can see that. So we'll go back to the 1 hour time frame, and then we continue to mark. Okay, you can keep practicing. If you practice for a while, you get used to it. Okay, so you put this here. This is the low, and then this is the high. So whichever price break first, and then price took this low first. This low. Price to this low first. So what do? We take our highlighter, we mark it. Okay, and then we move our trend line all the way here. Good. Right? Still coming from this high. Now, price to this low as well. We take our highlighter, we mark it to the lowest point price got to before it pull back, and which is this. You can see we have the bearish candle and then we have the bullish candle. It's actually this It's this actually, this one. Okay? Yes. So do not ignore any one candle pullback on the higher time frame. Okay? So we'll put our trend line there. And then we ask ourselves, where did this low, where is it coming from? It's coming from this high. Okay? Okay, good. So now let me take this out. So this low is coming from this high. So we're going to take our highlighter and then mark it. So we'll move this here, and then this. So which broke first? This low was broken first, right? With this one, and this is the lowest point price got to. And where is this low? Which high is it coming from? It's coming from this high. Okay, we'll mark it. If you still go down to your 15 minutes, it may look unclear now. You go down to your 15 minutes, you get the structure. So in this video, I am teaching us how to properly mark our highs, our lows in our market structure. I'm going to make a part 2 of this video to actually show us our valid break of structures and the kind of break of structures in which we should be trading from. Okay, so this is the high. I'm going to take it a little bit higher, right? And then that is the low right there. Good. As you can see, it's a structure as well, so do not omit it. Okay, it is a structure. Okay, it is a structure. So why are we marking our market structures? Why is it important to get the highs and lows of our market structure? You might be wondering, why is it important? It is for us to get valid liquidity. Okay, on each time frame, it is for us to get valid liquidity. Which liquidity is valid? Okay, you cannot say, okay, every highs and lows, every highs and lows are liquidity. Yeah, you can say that, but which liquidity will market actually respect after taking? Okay, and that is what we are doing. And that is what we are marking. That is why we are marking our highs and lows. So it's part of the market structure. So you have to get them correctly. So wait for market to break any of them. So market took this low first. This is the high, and then this is the low. Right? Good. So market took this low first, and then this is the lowest point price got to. The lowest point price got to, which is this. Okay? Before a pullback. You can see the pullback. And then where is this low? Where is it coming from? It's coming from this high. So we're going to mark the high. That's the highest point market price got to. So that's the high, and then that is the low. So we'll take this back to this low. So which low did market break past? Market took this first. Okay, so put a highlighter right there. Good. And where is this low? Where is it coming from? It's coming from this high. Okay, the highest point. All right, good. So we'll put our trend line. I know this might look confusing now, but trust me, whatever question you have, just put it in the comment section. Even if you want to do a chart practice, a chart review, screenshot it and put it in the comment section. I'll be able to reply with messages. Okay, so this is the low, and then this is the high. So which the market break first? Market broke this high first, and where is the highest point price go to? It's this point right there. Okay, and then where is it coming from? It's coming from this low. So we leave it at that, and then that's how you keep on doing it. Okay, you mark your trend line. Sometimes we have big structures, sometimes we have just small structures. So which did market break first? Market broke this low first. Okay, we took this low first. So we'll do what? We mark a highlight, I'll put it there. And the where is it coming from? It's coming from that high. And then after that, market did what? It took this one. Okay, you put your highlighter. The highest point, whatever is happening in between, this is none of your business. Okay, the highest point, and you can see market took this high again. You can see that immediately market takes all these structures, market is always reversing. If you are a scalper or a day trader, trust me, you will get a trade from here. If you enter from your 1 minute, you get a trade from here to target something. Okay, look at this too. Market took all of this, okay, and then reversed, came and took this. As soon as market took this structure, it did what? It went higher and took this, okay, and then it reversed, and the market came back and took this again, right? And then it reversed. It always does once it takes external structures. Like, so you have to mark your structures properly. You see, market did not respect this one. In which most of us will mark. It didn't respect it. Market did not respect this one as well. You can see that. Okay, it didn't respect any of those, but it respected those structures in which we marked. Look at them. As soon as market takes them, it did what? It reversed. Okay? Depending on the bias of the market, look at it now, market came back. Now, I'm not going to use my trend line again, I just want to explain this. I don't want to make the video longer. So, market took this low, look at it, it took this low and then did what? It went back up straight. Do you get? So, this is the high and then this is the low. Okay, so market did that, it took that, came down, and then that's the highest point market price got to. That's the highest point price got to. So in whichever time frame you are trading, even if you go on your 15-minute time frame now, it's the same thing. On your 5-minute time frame, it's the same thing. So we are using the market structures right now to find out proper or to identify proper liquidity, valid liquidity. Okay, that is what we use the market structure for. Okay, so it is very, very important that you get your market structure highs and lows correctly, so that when you are whatever strategy, because I believe that every strategy you're trading should have something to do with liquidity, right? Because that's what the market chases. Okay, good. So in the next part of this market structure video, I'm going to be making us I'm going to be showing us the real break of structure in which we should be trading from. Maybe if you are using SMT or SMC, smart money concept, your real break of structure, which is the valid break of structure to actually trade from, is how are you going to find out if this is actually a break of structure or just a liquidity sweep? You understand? I'm going to teach that in the next volume of market structure. So I hope you understand this video. If you don't understand, please feel free to ask your question in the comment section. I'm going to answer every questions that you have. Okay? And if there's any other topic you'd like me to discuss or to talk about or to teach, please put them down in the comment section as well. I'm going to, anytime I make a video on that, I'm going to tag you as well on that. So that will be all. See you in the next video. If you watch this, please practice because you have to practice to really understand. Okay, you don't just watch and think, okay, you've understood it. No, you have to practice to really understand. Okay, so in the next, if you watch this part one, please do not forget to watch volume two in order for you to be notified once volume 2 is out. Please click on the subscribe button, subscribe on the channel, and then click the notification bell so that whenever these videos comes out, you will be the first person to be notified, and then you get the notification and then you'll be able to watch it to follow through. Okay, good. See you in the next one, guys. Bye bye.